today we're talking about handle an audit on your own. So there's a lot of folks out there, when you get audited, the first thing you think about is, can I do it myself? And of course you can. So today, in this 30 minutes, what I want to do is to run through the most common audit and give you clues on each of these audits and at what time, and you are doing it yourself, but at what time it might be better to get professional folks to help you, like Community CPA. Not everything you have to hire professionals, but sometimes, for some cases, it's better off to hire people professionally. So handle an audit on your own. And yes, you can do that. And the 3 more slides that's about me. So you are listening to Ying. I am the CEO of Community CPA. I'm also the founder of the company since 1998. So you can calculate how long we're on the market. And this is the first book I wrote in 2019. It is about starting up a business at 8 a.m. Then the second book now is already with a publisher. It's going to come out very soon. That is the second book I wrote this year. And it's about growing your business at 10 a.m. And look forward to my third book, which is expanding your business at 2 p.m. That book is about expansions, merger acquisitions, things that is very exciting to entrepreneurs. Then of course, I am planning to write the 6 p.m. book, which is retiring from your business. Not ready yet. Right now, that 4th book only have 1-page content. It says no retirement so far. So really what we have right now is to just give you an idea, and we have a book coming out other than those webinars. Other than the service we provide to you, the book will also give you guidance on how to be a superb entrepreneur. Don't you want to be that? I know you do, and I am too. So I want to set example for everyone follows me, and we go on the path of success together. Me and my client. That's really my goal. And without further ado, there is a no responsibility disclaimers. And this is just basically saying that any information you got from internet, you want to be critical about it. And don't just believe everything people say. And you can trust our source of knowledge just because we have reputations, we have credentials, we are regulated by CPA societies. There's a lot of governmental regulation is upon CPA firm as well, and we have peer review. There's just a whole bunch of compliance related things we follow as a firm, so that gives the user, gives the customer a safety, the safety promise. I lost my words right now. So give you that security knowing that you're dealing with a reputable company. All right, and going forward, how do you know you got audited? And don't talk about, oh, I'm going to take care of it myself. Just how do you know you get audited? You get a notification, folks. You got a piece of material called paper. It says that you get audited. Are you going to get a call from the government and say, hey, lucky you get audited? No, you're not going to get that. If you do, and that's a spam. And you will not get surprised by some government officials and stepping in your front door and goes, you're getting audited. Congratulations. I am John Smith. Nice meeting you. That's not going to happen. And even if that really happened, it is not called audit. It's probably called a criminal investigation or some other sort of, things that government is doing to you. But you should not be surprised, and you will not be surprised if you check your mails and knows what you're getting. And you should not be unfairly targeted just because your neighbor is the IRS auditor, you don't get along. That doesn't happen, should not happen. Our regulations and the preventions inside of IRS is so maturely done. That should not happen. Even if your neighbors to your auditors and who doesn't get along with you because your kids fight with each other. And that particular auditor don't have a right to even look at your tax returns in their system. They are guarded by their ethical performance, and the IRS regulate them to not project personal interest into taxpayers. So you should not be unfairly targeted. By overall, you will fairly know you are being audited because you got a notice saying that you are being selected to be audited, or we would like to look at certain materials from you for what you claimed. So what are the most common audit? As a small business owner, we want to do everything on our own. So what are the audit that's most likely come upon us? So of course, 10 years ago, that's not the list. But today, this is the list we give you because that's what's happening in the field right now. ERC audit. ERC audit is the Employee Retention Credit Audit. And we will talk about that, and you will get a letter. And the government, the IRS will require you to provide certain documentations. And the income tax audit, this is a regular audit. When you file your tax forms every year, and you're subject to income tax audit. Sales use tax audit, that's a state audit. Audit you for sales tax. As a business owner, you're supposed to submit sales tax. DOL audit, that is a labor audit. Right? As a small business owner, if you run a restaurant, you run a risk of being audited because your disgruntled employees and went to DOL and report you not paying them enough. They're working for you but underpaid. So those are the audit would come in. And the employment tax audit, like classification unit of IRS would come in, goes, some of your contractors supposed to be employees. These are the audit you might face. And of course, last but not the least is in the trend of increasing. That is 8300 audit. It is a form. It is a form that is a Bank Secrecy Act, which really to audit you for cash transactions. If you're in the business, have a lot of cash transactions, you will see the Treasury coming in. They're not IRS. They're the Treasury Department under IRS would come to audit you for how you handle these cash reporting and the cash transactions. So without further ado, I said that so many times today, and I want to now go into each one of these audits to tell you that when you get the notice and at what point of time you can do it yourself, and in what situation that you really should be looking for professional help. Okay, so let's go. ERC audit. So we briefly talked about ERC audit, right? So ERC are the credit that you got for 2020 and 2021. The IRS could come back in and say, okay, we want to reevaluate your ERC claim, see whether you really qualify. So they came in, they could look at these 5 things I listed here. So in what case that you will do it yourself, let's say you applied ERC yourself, then you for sure had already gone through the 1, 2, 3, 4, 5 things. And when you do that, then of course if you get audited, the best bet is to look at what you have done. And if your documentation is there, you got eligibility right up, you know exactly how you eligible, your sales dropped, and you can pull out your POS system that shows that. And if you have those things already in, the ducks are already in the row, you don't have any worry. I would say you can deal that yourself. But what if you did an ERC and you didn't even know what you did? And then just a friend of yours told you that you can get $26,000 a year for each employee, so you just went in and did that without doing any of the eligibility study, without studying your gross receipt, without doing the operation test and ERC calculation, and you just force the number into the 941X form. If that is the situation, I would say that you need to find a professional to help you, to see where you are. You did it that way doesn't mean you don't qualify it that way. You may have a good reason back in your mind, but you just did not put in the documentation, put in the effort to make it right. So in that case, see, can you do it yourself? Absolutely you can. But should I encourage you to do it yourself? Absolutely not. I think you need professional help to get that properly documented so you can pass the audit, the IRS audit, or you return the money back, right? So that is ERC. The next one is income tax audit. So what are the common triggers for those income tax audit? That will give us a clue on whether we're going to do it ourselves or we're going to hire community CPA to help us, right? So the common trigger on income tax audit is actually data mismatch. Data mismatch means the IRS has a bunch of data from you, not from you, from the service provider. For example, your merchant account gave IRS a number, said that your credit card income was $2 million. But on your income tax return, you are a restaurant, you only reported $2 million. You didn't even have a $2 million more. So in the restaurant business, no one would be okay to not see any cash sales. IRS is not okay with that. IRS will ask you, what happened to your cash sales? You say, nope, I just don't get cash sales, never. And you know that is not possible because in reality, in your area, IRS already collected 500 other restaurants' data. All of them shows about 9% of cash sales. And you're the only one didn't have any cash sales, not good. So with that, this is a data match mismatch. So IRS would, based on that, come back to see you. And the data deviation scores is something IRS calculate inside of their system. Just like what I told you, if your area of restaurant was reporting 9% of cash sales, then you suddenly become a one that was 0%, your deviation score will be way out. So you will be pulled out for audit. So with those kind of difference, you become a subject for audit. IRS would send you, IRS could do three things to you. Number one, they send you a letter. Simply says that, you know, I have a interest income of $500, but I don't see on your tax return, and I think you owe about $200 taxes. That's the CP2000. That's a data match, straightforward, one by one. So you can deal with that on your own because it's very straightforward. You have it or you don't have it. Maybe you look at IRS letter, goes, oh yeah, I have it. I just forgot to give that to my tax preparer. So, or I just forgot to put that in myself. So in that case, you just go ahead, deal with it. You write a letter saying, Mr. IRS, you're really good, and I agree with you, and here's my payment. That's it. That you don't need to do anything anymore. But IRS could also do, there are three things they can do. They send you that letter we just talked about. You can respond in the letter. Or they send you a letter saying that we select you for audit. I will see you at my compliance office 8 o'clock in the morning tomorrow. Okay? So that is a local audit. What happened is they see the mismatch, then they run your files to the local office. They told the local office that we like you to audit this client, so you get audited. And in that case, you're going to look at your backup. See whether you're solid or not. For example, when I say whether solid or not, I would give you an example. If you claimed $16,000 on mileage claim, and in your backyard, you did not have those mileage documented with 5 components: the date, the starting point, the ending point, the purpose, and the total mileage. If you don't have this 5 on a spreadsheet, listed every travel, and then at the end is the claim of $16,000, you're not solid. So when I say whether you're solid or not is whether all the expenses you have on your tax return backed up by real third-party receipts or by your compiled spreadsheet, right? So if you have that, you can do it yourself because you can go into the IRS office, represent yourself, and show every question the auditor gave you. You can submit the auditor goes, I want to see how your supplies can be $2,000. Normally in your line of business, supplies would only be a couple hundred. Okay, you can go home and find the receipt that you have, which is add up to be 2,000, then you go, you give that to the auditor. No big deal. It is a straightforward shot. But however, if you are a taxpayer and you just say that you are like, I just did my best estimate, and at that time I was too busy, so I didn't really have anything planned. You want me to look for that $2,000 supplies? Man, I don't know. I don't remember. If you start talking like that, and it is a good time to think of doing it by professional folks. By professional folks may not save you. They won't be able to make up a receipt for you, but what they can do is to give you more idea of how to get that receipt. For example, and we will, if you come to us, you go, Ying, I just don't remember. And I knew I spent 2,000, but I couldn't remember. Then my question to you would be, how do you normally spend these money? I have a credit card. I have a debit card. I don't spend anything else. I just spend over there. I don't really spend cash. I don't have cash. Okay, then let's go to your statement to look at the statement overall and one transaction at a time to see whether you can recognize those transactions. Oh yes, that one from Staples, that was the transaction I did for my business. I bought a whole bunch of invitation card because I was going to have a client get together, have a party, so I was sending out the invitation card. So that was the expense I spent. You see, so what we do we will actually cut in the kind of, I call that laziness, but that's such a strong word to use, right? It's not laziness, sometimes it's a mental block. We just really couldn't get down to that level of detail. But we are trained to be the people that really get down to that level of details. We have one client claimed 76,000 miles in the business deduction mileage. You know how he claimed it? He actually will charge that mileage to his invoice to client. So he just kind of roughly knowing that his invoice is 1,000, then he has about $20 on the mileage claim. So each invoice has a little bit of mileage. So in that invoice, it will say how many times he traveled. So what we did, we actually went through all the invoices of that client for that year and add up, reorganize the mileage for every single invoice, came up with exactly what our client claimed and submitted to IRS. IRS accept that. So you cannot give that to the auditor. The auditor is not going to count your shoebox, but you need someone else to be able to cool down, do it for you. And sometimes as a taxpayer, when you are the person getting audited, it is hard for you to focus. That's when you need professional. It's not that they have a magic to just make IRS not seeing those numbers. It is because they have the coolness to go down to details, to add them up, subtract them, and make adjustment so the auditor can see what they need to see to approve your deduction. Makes sense, right? And when, if you have a lot of deposit in your bank account, the auditor will say that those are all income, and you need to come in to prove that that's not the income. Some of the money my mom gave to me, and because I'm running so bad with my business, that's my mom's money. So just by saying that to the auditor is not good enough. And when your professional folks come in, we would work with your mom to show that how she drew the money out of her account and how to see that money come to your account. And you may sitting there goes, oh no, then my mom will be audited. No, your mom will not be audited. In the audit case, the auditors are very focused. They're focused on you. And whether other people has issues or not, normally, most of my cases, I have never really had cases that going from you to your mother. No. And they will, as long as you have a proof, then that is not income. So that will save you from the trouble that IRS would charge you for additional income, right? So that is really, on the income tax side, it is really about documentation. If you have good documentation, do it yourself. But if you feel like you couldn't handle, it's too messed up, and you're too overwhelmed, and when you get the audit letter, you're already losing sleep and cannot really have a normal life, that is when you need the third party to come in to help you. Not because they have the magic, it's because they have the knowledge to know what IRS needed. They also have the coolness to go down in the detail and to fish out what the auditor need. A lot of times when I go into audit, I really, the auditor who work with me a lot knows how I organize my information. They are, they love our firm's work because we're very organized. We color coded our pages, so the auditor knows where to look for what, to make it easy for the auditor. That's the best job you can do. Don't try to make auditor overwhelmed. That doesn't work. You want auditor to be so delighted to look at your paper, knowing exactly where to go for their questions. That's how you get no change letters. At our firm, in 1 week, we got 2 no change letters because our clients who work with us from accounting all the way to taxes, and they do have that work quality in their book. So when IRS come to audit, it's never an issue because we can prove everything we did. We can organize our answers in the way that is delightful. It's not stressful. All right? So that is so much about income tax, and having good accounting is important, folks. You want to make sure that your accounting is accurate, then your tax reporting will be accurate because your accounting is. And then if you get audited, no big deal. Nobody is happy with being audited, but the stress level is very different when you have a strong backing versus, yeah, I just totally didn't do it. And now I'm in trouble. And if you are that one and come to professional firm, have them get you fixed before you face the auditors. All right. So the next audit item is sales use tax audit. And you want to know the trigger of this one so you know whether you should go for it on your own or you get professional help. So the sales tax becoming more and more challenging because more and more people are selling to other states, right? The restaurants are not so much of that issue because your restaurant is sitting in one place and you are in that state. But the other ones, online selling and things like that, it is complex. So a lot of times the state would come to audit those companies. They felt maybe sales tax was not accounted properly. So when you get audited by sales tax, there's only 2 things you want to think about. Number 1, whether your system in your business matches to what the government has in their system. So for example, you have a point of sale system and which has $1 million sales on it, and you're paying sales tax on $1 million. That's on your system. But with the government, you report something less than $1 million, and therefore your sales tax was less. If you have this kind of difference from your system to the government, I would say that you are easily get caught with that difference. Maybe it's not intentionally, maybe your system is just a garbage, I don't use it seriously, but I want to say that when they come to audit you, they want to look at your system. So making your system equal to the government, what you reported, that's really a very basic requirement. You cannot write on the fact that, I just report whatever I report, the system is different. If you are that person, when you get audited, you need a professional help because you need professional help to figure out why the system is not the same as what you reported. There could be legitimate reasons, but there also could be reasons that you felt legitimate, but it's actually not. So you owe a whole bunch of sales tax, right? So if you already knew you are in trouble and then you want professional help, because sales tax audit, not like income tax audit, is limited to 3 years. Sales tax could go for 10 years, folks. So it's a lot bigger responsibility. And the sales tax is also regarded as a trust fund, because you take the sales tax from the consumer, you pay to the government. So it's not really like income tax. You pay that to the government from your own pocket. You didn't collect income tax from your consumer. But sales tax is a trust fund. The government trusts you to pay it to the government, right? So with that said, if you don't submit to the government, it is actually totally illegal. You are holding government fund, so you are personally liable all the way to your grave. You can't get away from sales tax, okay? Unlike income tax. If you owe income tax to IRS, you only need to pay it for 10 years. After that, IRS forget about it, because they don't go more than 10 years. But sales tax and payroll tax are two kind of taxes. They don't go away. They follow you to your estate. Means that they follow you even you die, and they make you pay by the money you saved for your lifetime. So with that said, it's a serious audit. You don't want to look it down thinking it's from state. It's not from IRS. Uncle Sam is not here. It's just state is here. And when they did sales tax audit, if they assess more sales tax, your total sale increase, right? So you'll be getting Uncle Sam notice saying that you underpaid income tax too. So these are not disconnected, they're connected. So with that said, and if you are paying sales tax properly, and what they're auditing you is no big deal, and your system matches with what you reported, and you believe that everything is good, you don't need to hire anybody. It should be a very straightforward audit. They only become tricky is when you already know there is a big discrepancy. Then hire professionals. Hire someone for yourself to protect you from unfairness. Maybe they misunderstood your situation, whatever that may be, and have the professional working for you. At least if you pay the right amount, right? Not paying something is not right. If they start estimating your cash sales at like 20%, that's not right. There's nobody have 20% cash sales these days. They are like all under 10, right? With that said, you understand the sales tax. Actually, out of all of these audits, sales tax and payroll tax audit, I would consider that to be most detrimental, because you cannot, is your liability personally, not just with the company. All right, then what about Labor Department audit, DOL audit? The DOL audit, normally, how does that happen? Normally, it's coming from your unhappy employees. If they're not happy with you, they think they're underpaid below minimum wage, they have every right to report you. And they are being rewarded to report you. Let me tell you how they are being rewarded. Let's say I'm your employee, and you pay me $1,000 a week for my work, but I work 100 hours a week. So you underpaid me, you didn't pay me overtime. So with that, I can go to DOL, say, hey, I'm underpaid, I work here, this is my paycheck, but my time card shows that I work there, 12, 14 hours a day. So they will come in to recalculate how much you short Ying for that not paid overtime, $500. So you short Ying $500. The DOL will turn around, ask for 1,000 because there is a penalty for whatever you short. You short me for 500, you're gonna pay 1,000 to DOL. You know what DOL do with that money? They give it to Ying. They give to the people who did not get paid by you properly. So I'm getting $1,000 instead of 500 if I get paid by you properly. Why am I not happy about that? I'm happy about that. I get $1,000 from the government and you are forced to pay it. And so you paid it, I still work for you, and you have to increase my salary, and whatever you were doing with me before is not good enough now. You pay me more and I get a lot more from DOL. You don't think that's an incentive to disgruntle the employee to take advantage of the business owner? It is absolutely the case. Majority of the cases coming from your disgruntled employee and who are reporting you. And sometimes these employees are still working for you because DOL will not tell you who they are unless you go to court. Then you will, the lawyer would get that name for you, but you don't know who is doing that. So with that said, for business owners, let me tell you, it's just not worth it to do anything different on the payroll. And if someone walk up to you, goes, I want a $1,000 paycheck, but I need you to give me $3,000 cash. So my total pay is $4,000, but I just want to see on record for $1,000. These are the people you want to pay attention to. They are not doing you a favor. You're not saving that much. But the risk of doing it wrong is so great. The DOL will come to you. They will get confirmations from your employee knowing how much they work. They can sit outside of parking lot, time everybody when they come in, when they go out. Then they're gonna come around saying you only paid Ying for 1,000 and you have no proof that you paid me the other 3,000 and you are the one suffers, nobody else. If you get into this kind of audit, you think you can handle that yourself? Absolutely not. You need professional help. If you got into DOL audit, you either find the attorney to help you or you find a CPA firm to help you. Dealing that on your own, you will absolutely lose because it is not you about your record. It's about who report you and what they say about you. Okay? I have not seen any DOL audit come to the auditors and win. There's never the case. Never the case. But they also don't just come around for fun. They only dealing with the cases that was reported or for whatever reason was triggered. So it's not like they just go around and figure out by alphabetical orders to audit people. No, it is all come with a reason. All right, the next one, payroll tax audit. So this is the most audited area. It's related to the payroll. And whether small businesses, when you issue 1099, think again, maybe that it should be a payroll. So this area of audit kind of duplicated by DOL, IRS, work comp, they all audit your payroll. So your payroll is done professionally by the professional firm, and then you can rely on them. And a lot of times, a lot of records, you can get directly from your third-party service provider. So you can do it yourself because you have these people give you the record. But if your payroll wasn't done right, if Ying's paycheck is not what really should be, then you need professional help. It goes back to the DOL audit, and you want to make sure that you have a professional representation so you don't end up paying all kind of penalties and rewarding the person who reported you. And business owners do that a lot. We, of course, as a system, it is rewarding people who are the whistleblowers. So if they went out, they're not always right. Some of them are just totally, mental. And I think some of those employees that you fired, they're not happy and they're sick. So they do sick things out there, okay? And if that is the case, and you don't have your record, and you don't have your professional service folks back you up, and you will just be victim. You know, for business owner to become victim, we see that all the time. We should not be. We should do the proper things, follow the rules, know our right, and know when to apply, to ask for help from professionals, right? All right. So with that said, and I want to briefly mention, where am I on this one? Most audited area. Okay, I clicked a couple times and it didn't really work. So this is IRS workforce audit related to payroll. I already covered that. If you use third-party service provider, they can support you. And if you are doing it yourself and you felt like you're doing it wrong, don't try to do it yourself. Hire a professional to do, because these are serious audit. If you owe any money, it follows to your grave. They don't have any way, like income tax, can be written off. All right. So the last one I want to mention is Bank Secrecy Act, and this is the cash transactions. So if you are in the business, you get a lot of cash. For example, if you are, I'm trying to think about the clients, but didn't really want to name the clients. So if you are in the business, for example, you're selling home appliance, and those are big purchase, right? But you have contractors coming in to buy the washer dryer and a whole slew of things with $40,000 cash. So you, as a seller, you would need to report that cash transaction. Am I right? So the 8300 audit is coming to audit you for that. Do you have proper record? Did you report it? So because they don't want money laundering going on in the field, and there is a new corporation, I call that Corporation Act, but I maybe misspoken the term. There is a change to the reporting for new companies. Is coming up, which will disclose the small companies, people like you and me, the small companies, and who is the owner, and how many employees you have. So that is a direct counter to money laundering, because they don't want people to set up a small company washing cash around. So that is the effort the government is making, trying to block money laundering. And this Bank Secrecy Act is going up and up on the audit. More and more people, when you receive cash a lot, your bank will send report to the IRS. And you don't see that report, the bank sent automatically. So at IRS, they have a record of you depositing cash. You know, if you're a grocery store, of course, that's considered normal. But if you are an appliance store, or your cell phone stores, or you're something else, or you're a CPA firm, you're a law firm, you're depositing cash left and right, that is suspicious. So that would trigger this kind of audit. With you knowing that, if you really did that, and you triggered audit, and are you going for yourself, or you get a professional help? I would vote to get professional help, because those kind of things has a lot to do with compliance. Maybe you just didn't even know you're supposed to report. Maybe you know, but you got a little lazy, you didn't do it, right? So with all of these things, it is better to have professional be assisting you to get through this audit and talking to the auditors. I'll tell you, at one time, we have an audit for the Form 8300 audit, and the auditor is new. And I am not making this up. This is a real story. The auditor doesn't even know what she is doing. So she was telling us that our client is subject to this huge penalty. And in reality, our client did not have anything wrong. You just need to know the rules. And the auditor is new. She doesn't know. So we have to call up the supervisor of that auditor, be in the same meeting to correct what the auditor was saying. So the supervisor, of course, agreed with what we are saying. So the auditor learned that is not the case. So with that said,
Yeah, you need a professional because it is a deep enough knowledge that maybe you're just too busy with your business, you don't know what's going on, and you don't care to know what's going on in that area, then professional can come in to help you. So with that said, this is our today's talk related to audit, just trying to gauge you in terms of you do it yourself or you want Community CPA to help you. But in any case, if you are not sure whether you want to do it yourself or professional to help you, that itself can be a question to us. You can go online and engage us for a 45 minutes talk, and we can look at your case and give you our opinions. If you can do it yourself, we absolutely don't want you to spend money to hire professionals. But if that is not the case, it is better off to pay for a professional to get yourself out of the troubled water. All right. So Catherine@communitycpa.com. That is the email that if you have any inquiries related to our webinar, want to hear something else, send it to her. She is our librarian. She's our marketing chief in charge, and she will take care of you. She will make sure that we prepare our webinar to meet your need. And we are the CPA firm, open 6 days a week. Yes, you don't see another CPA firm open 6 days a week, but we are. And you can call us on Saturday, we pick up our phone. You can visit our branches on Saturday, we are there. And I hope that you're impressed and you will be doing business with us. And I will talk to you again on Saturday.